Good morning, everyone, and welcome to this morning's webinar, and thank you for your patience. We've just started a couple of minutes later than usual. We were applying some very low-tech solutions to a little issue that we were having with the connectors on our headsets. So it's amazing what a pen can do, lifting up one of the connectors, and it seems to have solved my problem, but I think David's got another one. Anyway, whatever, that's minor stuff. Welcome. What are we doing? Yes, before we start, as always, with the apologies, I think the issue with the pen and my connector has temporarily, I've lost my thread of the thread of my thoughts. Anyway, welcome. Before we start, as usual, can I draw your attention to the disclaimer that we can see on the screen? As you know, trading can be a very risky business, so please don't ever think of using money that you cannot afford to lose. I can see we have some of our regular attendees. I see from the list we've got those of you who have invested in our quantum trading tools, and we have some students from our Forex trading program. And I know we've got people who maybe this is your first visit, but into whichever category you fall, you are all very welcome. And we are going to go straight to the charts, because obviously all sorts of things have been happening, and it certainly kicked off yesterday on the in Forex, and particularly for the British pound. Needless to say, after yesterday's kind of very strong moves that we saw for the British pound and across the whole pound matrix, that by matrix, for those of you who may not understand the phrase that I'm using, it is basically the set of pound pairs that we consider, or that David and I consider, and the pairs that we have programmed into the indicators from our company, Quantum Trading. Now, a very quick look around the what's happening on the fundamental news, and just generally today, as you know, it is Thanksgiving, so the American markets will be closed. It tends to be a very quiet day. I mean, the Forex market will still be open here this afternoon in the UK, but there will be, next to nothing liquidity. What happens is it will either be one of two things: nothing seriously would happen, or when there is a move, it will be greatly exaggerated because of what we call thin liquidity. Thin liquidity is something we are approaching anyway, because it is coming towards the end of the year. Sometimes it can offer some great trading opportunities, but you have to be aware that the drivers for the moves on your charts, they may not last very long. You've got to be really quick and nimble on your feet. Some traders like it because it adds a bit of volatility. Other traders think, oh no, it's too much, because you have to factor in maybe a wider stop loss for the kind of whipsaw action. It may not suit your trading style, and also it may not fit in with your money management rules and the capital that you have available. So there's all sorts of factors that you have to take into consideration. A quick look at the calendar. I always suggest we have two calendars. One is the Forex Factory one, which most traders use. It's free. It's a great site. And then the other thing I like about it is it's a very clean calendar, very easy to read. And what it also offers is this graph along the side here, which allows you to just click on what the release is, and you can see whether there's a trend, there isn't a trend in the news release that is under consideration. What I also suggest is, and this is a little bit more, if you like, not complex, it's more comprehensive, and that is investing.com. They have this, they really do pick up every single item of news for all, really for global currencies, as it were. And it's just nice to compare the two. Sometimes Forex Factory don't pick up everything. They kind of give traders what they feel are the ones that the majority of traders will be focusing on. So it's just a little tip for you to have a look at. Now, going back to volatility, how do we know that we are in a low volatile environment? Well, we can see that just by looking at the charts. A lot of charts will be in congestion. It's just not moving very fast. And also, if you use use a non-time-based chart, either a tick chart or a Renko chart that I use on MT5 and David has tick on his NinjaTrader, you will see non-time-based charts that really just move according to the speed of the price action. So on a Renko set at maybe 3 pips for every brick, that 2-3 pip move, it could take a few seconds, nanoseconds, or it could take minutes. And that also gives you a hint as to how things are moving. But we know generally the market is in a low volatile environment. A low volatility also breeds complacency in terms of sentiment. Why? Because we look at the VIX. The VIX is now under 12. Complacency in the market is actually a very dangerous time because, you know, it's very quiet. Traders are generally, as I said, very complacent. The equities and the indices are moving higher, and it becomes a very fragile market. So it won't take much, if you like, to spoil that complacency and an equilibrium. From a trading perspective, it can be very frustrating because, you know, if the pair that you are trading isn't moving very much, or you're looking for a trading opportunity and, you know, nothing's going anywhere, you can become very frustrated. But you really mustn't. You just have to understand the context of the price action, what is happening in the wider landscape, and just be aware and just be more, you just have to be aware. That's really the best way I can describe it. Going back to the Renko, this is the pound yen. I've got the pound yen up because it offers the numbers of VPA lessons. It shows some of our indicators and how our indicators, we've developed these indicators to help us with our volume price analysis, but also to help us with all these other factors that I have mentioned. And just very briefly, can I mention at this point, everything I've spoken about, we cover in our program. And here we are, the program here. This is our program. It covers, we believe, everything you need to know to become a successful trader. And David and I are very proud of what we have put together, and even more delighted and more proud for our students who have taken the program and who are now, you know, are successful, maybe, and that's both new traders and traders with some experience. It's really pulled everything together for them for this market. It's not a complicated market, but it's a complex market. And I also have to say, what is in this program in terms of the psychology, the fundamentals, the relational, the technical, and the mechanics of trading, to be honest, you can apply it to anything. It's not just, you know, it is Forex specific, but not Forex centric. So as I said, there are lessons in there for whatever you trade. And if you can be successful in Forex, I can assure you, when you come to do stocks or you know, commodities or futures, in some ways they are much easier to trade. But if you start with the Forex and, you know, the knowledge that is there, you can certainly apply to trading and investing. To be honest, it just covers the whole financial landscape, as it were. But I'm going to stop there. I'm going to pass over to David. As I said, I've got some stuff to say about the British pound, looking at the shape of charts to a clue for what may or may not be happening, multiple time frames, what they can tell us, as I said, from a VPA perspective, how the indicators can help you make sense of what is going on. And just one my last thing, this is the Renko chart for the pound yen. It is actually set at the ATR, so the indicator is running the speed, if you like, the speed by which, by that I mean the speed by which the, how many pips have to go through the market for one of these little bricks to complete. And we can see here it's set at 2.14 pips. So every time 2.14 pips goes through the market, one of these little bricks will complete. But you can also set it on a manual setting, so you can set it to 1 pip or 1.5 pips. Sometimes in a very slow market, that's not such a bad idea if you are looking for scalping. How you use these tools and how you can use them, is very much up to you. You can integrate them into an existing set of tactics, whether you use Fibonacci, whether you use Gann, whether you use Elliott wave, they're there to support you. Or you can use them as we do. We use them as standalone. I sometimes use moving averages. David doesn't. And, you know, I said with the VPA methodology, we think they're about the most powerful thing that you have that is available on the market. And looking at, as I said, looking at the speed here, as I said, 2.14 pips, you can see, you know, it's taking a long time. When this market is moving fast, these will come out like a machine gun. And that's what we mean by, you know, understanding, being aware of how this market is responding at the moment is very quiet, and it can be very tricky. Not impossible, just very tricky. Right, I'm just going to pass over to David, and then, as I said, we'll move back and we'll obviously see, discuss the charts in more detail and see if there is actually an opportunity to be found in, you know, given what's happening at the moment.
I certainly am. Thanks, darling. Good morning, everyone, and good morning, good afternoon, good evening, wherever you are in the world. Good to have you with us this morning. No morning here, anyway. Just flicking up the NinjaTrader screens. Just while Anna was talking, I've just been hunting around, looking for various opportunities. It's relatively quiet, so there isn't a huge amount going on. I've got the Aussie Swiss here because it's delivering an opportunity for a reversal. Just start with those are the charts. They're on various time frames. I've got the 15-second going right the way across to the daily. But if I just go back to the currency strength indicator, which I've got on various time frames, just move the chat box out of the way. There we go. The reason I have my eye on it is because, as many of you know, I like to trade reversals because I'm a greedy what's-it, and I like to get in early. I'm quite happy to wait, be patient, wait for those moves to develop. And the one I had my eye on was the Aussie. It was buying. We got up around 6 o'clock here, 6:30. It was buying nicely, pretty much across the complex, not everywhere, but fairly strong buying. So the blue line is the Aussie, and down at the bottom here you've got the green line, which is the Swiss franc. And the Swiss franc was heavily oversold. We've had some Swiss data out this morning as well. And the Aussie was moving up into overbought. So it's an opportunity to look at the extremes, which is where my eye is always drawn. I'm always looking for those reversal opportunities because in getting in early, it delivers more. It's as simple as that. If you're a trend trader and you're looking for trends, then jumping on a trend is lower financial risk because your stop loss will be that much tighter, because the trend is already underway. If you're getting in or you're looking to take opportunities at these extremes, you have to wait and be patient. There's no guarantee this is going to happen straight away. And it's just a nice example that if you're patient and waiting for the reversal and you got in down here, what you're also looking at in terms of what is going on in the slower time frames, this is on 10-minute now. Again, you can see the heavy selling on the Swiss franc. You can see the buying on the Aussie. That's starting to roll over now on 10, and if we move on to 15, excuse me, the Aussie is starting to flatten off there. It hasn't got all the way up. It may well do. It may well continue on higher. There's nothing to say in the rule book that this is going to turn over nicely for us and the Swiss franc is going to curl up nicely for us. But in terms of a faster trade down on the fast time frames, that's what we're seeing right now. And it's a case of always having to define what it is you're trying to do, because someone who's looking at this on the 15-minute, for example, and probably slower, might well be seeing this as simply a pause, a minor reversal. In other words, it's a secondary trend within a primary, which we cover in detail in the program. And for their perspective, they may well be quite happy holding that position long, continuing to hold that, on the expectation that the Aussie is actually going to continue higher into the slower time frames. And what we're seeing on the fast time frames here is a scalping opportunity. It may be nothing more than that. If this reversal indeed goes through into the 10-minute and ultimately develops further strength and then through into the 15-minute and it becomes stronger still. It's starting, you can see the Aussie here starting to curl down, and we've got the Swiss franc rising. Then ultimately that becomes a longer term trend to sit in, not only through the ramifications of what is likely to go on down at the 5-minute and indeed lower, because if you go back the other way, if you go down to a 15-second CSI or a 30-second CSI, what you will see there is a constant oscillation up and down on here, but it won't reflect necessarily through to the 5, 10 and 15-minute. This is the nature of price action. It's just what happens on an intraday basis, and you as a trader have to figure out what it is you're trying to do. Are you scalping this? Are you going to jump in here, make a few points, pips, and get out? That's your opportunity. Or are you going to sit in this for the longer term? And when I use the phrase longer term, I'm talking this from a scalping perspective. So we're up in the top line here. So what are the signals up here? Well, the trend monitor is bright red, so it's giving us a strong signal that this is a bearish price move at the moment. We're looking over at the 2-minute. It's done exactly the same thing here. This is the classic rotation from one phase color to another. So we've gone from bright blue in this bullish trend. We've now gone into the transitional colors of darker blue. We've gone into darker red and out the other side into bright red. And it's helping to keep us in that particular move. Not a huge move, may not have great strength, but nevertheless it's there. What we can see on the 5-minute, and this is what it really comes down to, is the transitional color there is starting to appear, the trend line is starting to dive, and it's all about using multiple time frames to see that ripple through effect. Now what we're seeing, as I say, it's not a particularly strong move. We've got some buying coming in here under this candle. We look at the volume. If we look at the volume perspective and the price action, we've got buying coming in under here. We've got a deep wick to the lower body. We've got decent volume under here. And in addition to that, and probably more importantly, we're also trading around this yellow line here, which is the volume point of control. And what that tells us is that this move is probably not going to develop very strongly, purely because for the time being, we're trading in a high volume region on the 2-minute time frame. And what we're expecting to see as the price action trades in this region is congestion. Now we've got more volume coming in. We've got a big wick to the upper body, which is, if we're short, that's a good signal. The market's trying to rally. There's lots of volume under there. And bear in mind also that we're now coming into London Open. So we've got 10 minutes to go to London Open. The question you've got to decide is, do I want to be trading in a position that I'm taking on board now, but I've only got 10 minutes to London? Now, bear in mind, obviously, the US is closed, but nevertheless, we will get much deeper liquidity as London opens. But that's a question you've got to ask yourself. Do I want to open position that close to a new session, or do I wait for the open of the London markets? Inevitably, you see reversals, you see oscillation, you see volatility comes in. It's a great opportunity for the market makers opening up to trap traders into weak positions, and you'll see a trend that was moving quite nicely almost inevitably always comes to a congestion phase or in full-blown reversal, or you see trap moves as well. And Forex traders have to understand, you as a Forex trader have to understand the fact that the session crossovers are the perfect opportunity for the market makers to trap you into a weak position. It's as simple as that. So you've got to make a decision. If you were trading this or looking at this as a potential opportunity, is it close to the London Open? Am I prepared to take that on board, or do I want to wait for the market to settle off the first 5 to 10 minutes and then jump on board? So say we've got weakness here, we've got a nice wick to the upper body, lots of volume coming into that candle, giving us a heads up that perhaps this is going to continue lower in the short term. If we go down to this chart, not everyone's cup of tea, this is 15 seconds, very quick. The rationale for going down to these sorts of time frames, and it's available on Ninja, it's not available on MT4 and MT5, but it certainly is on other platforms. TradeStation we're working on, it's available on Ninja. The reason for going down to these faster time frames is when markets are relatively sluggish, if you're a scalping trader, you can still pick out opportunities here. But it's very fast, it may not suit everybody. What we've got here is some more signals of choppiness. We had a volatility signal here. So on that, the trigger is based on average true range. What we're expecting is the market to move back inside. Then we get another one, trapped to the downside. The market's now reversing off that. As soon as you see these signals, they appear in real time. It's very fast on 15 seconds, but they work in all time frames. The reaction you're expecting is one of two things, either a congestion phase to follow or a full-blown reversal. And what we're seeing, very minor. I appreciate we're on a very fast time frame, but the principle is exactly the same. This is a move to the downside, very fast. The reason, it's another mechanism that's used by the market makers, because if a market's fast moving, your natural instinct will be to jump in. We all do it. It's just, we're built that way. It's in our DNA. You can't help yourself, but you have to restrain yourself, because once the market moves very quickly and the volatility trigger appears, you can almost be certain that the market makers are participating because they've ramped the market very quickly, one way or the other, whichever market it is on whatever time frame. The market's ramped very quickly, one way or the other. Your natural reaction is to jump in. You jump in thinking, I don't want to miss out. It's the fear of missing out. You jump in, you open a position, and then this happens, bang. You either go into congestion, which is a squeeze of your emotion, or there is a reversal, which is what we're seeing on that particular candle. So what we're seeing here, as I said, we're trading around the volume point of control. We're expecting congestion. Congestion is now building for several reasons, not least from a technical perspective, because we're trading around this region. We've got the heaviest concentration of volume. The volume point of control is the fulcrum of the market. Think of it as a seesaw, if you will. And it's now, you have two people on the seesaw who are equally weighted. So the market is not going anywhere. We have the heaviest concentration of volume. The market is in price agreement, to use market profile terminology. And until a bullish or bearish sentiment starts to develop, then the market is going to oscillate around this particular price point for the time being. These red and blue levels above and below are based on price resistance or price support. The thicker the line, the greater those, or the stronger those regions. So in terms of the chart analysis, you have two aspects to consider. First, you've got volume, which acts in exactly the same way, where you've got these heavy concentrations of volume. The market is going to, at the very least, oscillate. It's not going to move through there very easily. If the market moves up to these low volume regions here, for example, then there's very little in the way of volume at any rate to present a barrier to a move for that particular market, and that can be either above or below. If we break to the downside, we've got low volume, the volume is falling away. So as the market moves down into this region from a volume perspective, it's going to move through there a lot more quickly, a lot more easily than if you've got high volume regions. The same principle applies obviously to price-based support and resistance, exactly the same way. So you can use volume and price in exactly the same way. It's a support and resistance mechanism to give you that answer to the question, where is the market going next? And at the moment, it's going nowhere. And that's the reason why. In addition to that, if we drop down onto the 15-minute chart, moving to a slower time frame, we've got some weakness signaled here. We saw market rallying, then we've got weakness, we've got a wick to the upper body, we've got decent volume under that particular candle, so we're expecting the market to reverse off there, which it does. Nice widespread candle on the next one, good volume on there as well. So the market is not looking particularly strong right now. I'm moving up to a very slow time frame, if you will, in terms of the 60-minute. Again, we had the volatility trigger here. This was yesterday. We had big volatility trigger, and the market is now trading within the spread of that particular candle. So if you're looking at this from a slower term perspective, then it's another reason, in addition to waiting for that to break away, but it also gives you a heads up from a faster time frame perspective as to why the market is in the congestion phase, because on a slower time frame, you've got a volatility trigger on that particular time horizon. Yeah, just going to move back to Anna. Hold on one moment.
Okay, we're back on the a couple of things. We're going to have a look at the pound yen, but I just wanted to look at the pound Aussie, which is a pair that we've featured quite a lot in the recent webinars. And it's also a pair I write a lot about on one of my Facebook pages, which is called Learn Forex Trading. So if you want to catch up on what I've got to say and just on the price action for this particular pair, you can have a look at Facebook, or the posts actually appear on the front of my personal website, which is, let me just quickly bring it up, and you can see here, there we are. And this is my site. As you can see, the books are up there, and then there are all the blog posts that cover they cover the broader markets, not just Forex. And as I said, because for two reasons. First of all, VPA you can apply to all the markets, so it's important that I reflect that in the blog posts that are there, that are displayed on the site. But more importantly, from a Forex, well, for all traders, doesn't matter what you trade. As a Forex trader, you need to, broaden your outlook in terms of what's going on in the rest of the market. And if you're an index trader or you're a stock trader or an investor, you still have to know what is happening in the Forex market, because it has a huge impact on everything else. It is what's called the money market. It's about money. And if you don't understand what money is doing, or what traders and investors want money to do, they want to move into risky assets, they want to go into safe havens, really you're going to be very blinkered. And sometimes what you see on the chart, what's driving the price action, really won't make any sense. And this is where some indicators will let you down, in the sense that you think, well, I've seen this perfect setup and I've got my levels, and and I'm going to buy at when the price hits that level, or I'm going to sell when it hits that level, and suddenly it doesn't happen. And you think, well, why is that? Well, there's all sorts of other reasons that you have to be aware of. But going back to the posts that appear on my various Facebook pages, you can see them there. Right, just take that down again. When I said earlier about the Forex market being the money, it's where the money is. It's the flow of money, and it's a huge flow. It's something like, how many is it? 6 trillion, David? I can't remember on a day. I've got the number somewhere. Where is it? This number is truly staggering. And it's at Reuters, which is here. There we are. That's coming up in a minute. It's 6.6 trillion a day that goes through. And in fact, 43% of it goes through London, which is why the London session is so critical. But flow, money, what's happening? This is where as David's you've been looking at the CSI over at Ninja. This is on MT5. I've actually got the CSI and the matrix on the same chart. And the nice thing about the indicators, you can actually click on and off the different individual currencies to see how they're performing. I was particularly interested in what is happening with the pound, and not necessarily against the euro. This is David been looking at. This is the pound Swiss. And I didn't want the Swiss for various reasons, but I wanted to see in particular what was going on with the pound against the commodity dollars, the Canadian, the Aussie, and the New Zealand, and also very crucially against the Japanese yen. Because what happened yesterday with the pound, it was driven by the polling data, which showed there was one set of results which claims that the Conservative Party is on for a substantial, a very healthy majority, as it were, rather than another hung parliament that we had since the last election 2 years ago. And the reason it's been picked up by the market so positively is because in the last election, it was the only poll that actually came out and said, hey, we think there's going to be a hung parliament. But, there's still 2 weeks to go, and anything can happen. But what's happening with the British pound, and you have to be aware of this, it is perfectly tradable, but it is also reacting to such news. A poor poll, or a poll suggesting there's a hung parliament, the pound tends to be sold off. A strong poll that we saw yesterday, the pound is going to be bought. And this is the point at which we can see here the takeoff of the British pound, which is the yellow line. And we call it a strength indicator, but in a way it's a flow indicator, because what it is telling us, it is telling us there is a flow of money into a particular currency, and this one was the British pound. Now look at the Japanese yen. The Japanese yen falls and is sold when the market has an appetite for risk. We saw the VIX, it's very low. When the VIX is low, it means equities and crucially the indices are rising. The traders and investors have an appetite for risk. The yen is then sold. So yesterday in the pound yen, you had this perfect symmetry in the drivers for this pair. It wasn't an asymmetrical. It was driven hard on one side by the pound, and equally strong selling of the Japanese yen. But up until then, can you notice the two lines going up together, moving along together? That would suggest and tell us that there's no divergence. So it was a case of, the price was sort of bumping along. And how that's reflected in the matrix, if we can see here, we had all the pound pairs closely stacked together, and what that also tells us is that there was a universal sentiment towards the currency. It was being bought wherever. It didn't matter. It almost didn't matter what the counterpart currency was. The numbers in this indicator, the matrix, they're also quite important, because yesterday, and you would have to look at the screenshot that is on the Facebook page. If I can pull it up, I will do. The pound yen was actually the strongest. There's been a slight reversal in the pound yen, probably an opportunity to take one of David's favorite trades, the reversal trade. But the numbers, the higher these numbers are, the stronger the move that the indicator is picking up in the pair. What we're looking at is actually trying to get some feel for what does it actually mean. We see pound Aussie at the moment at plus 19. Well, is that average for this time frame for this pair? Is it below average, or is it a strong number? Well, compared to what was going on yesterday, the pound yen was up at 68. I think it got to, the pound Aussie got to 60. Those were the two star performers, if you like, on the charts. And it tells you that there are strong moves there. If you miss the moves and you say, oh my goodness, I've missed it, perhaps they're not pairs that you would normally consider, then you say, okay, hi, it's had this strong move. When you have a strong move, you have momentum, you have volatility, there's an overextension. Possibly there is an opportunity maybe to take some pips to the downside when the move is faded. Nothing goes up forever, and certainly nothing goes up in a straight line. Now London is open, and immediately we see there's a reaction. And this is the time frame, the hour. You think, well, why do I have the hour? For me, the hourly chart is a really nice chart. It picks up what's been happening in the previous session, kind of gives you an instant snapshot of what is happening now, and you can get a bias, if you like, to what is happening with these individual currencies. And then I then apply that to the time frames that I actually work on. So this is my hour. I have either have a 12 or a 15. I have sometimes a 3 or a 5 minute chart. This, just depends what I will tend to look at all of them, but the profile that I have here may have the 3 or may have the 5. And crucially, I then have my Renko chart, which actually helps with the entrances, holding the trend, holding the move, and obviously the exits as well. Now this is actually set to an ATR setting as well. I'll just check what the ATR is on this one. Yeah, it's actually running through at 3.09 pips. Not hugely fast, but we know this pair isn't moving. It's not dramatically moving in one direction or the other. The CSI tells us that on the hourly chart, the lines are kind of moving together. There's no divergence yet. There's nothing to push this in one way or another. What's also interesting when we look at the shape of the charts on the different time frames is we look at the 15-minute chart for pound Aussie, and the thing that really stands out. First of all, we have this break away from the volume point of control, which is 89.86, but look at the trend higher. It's not a consistent trend. There's been a period of consolidation. We've had volatility in this trend. In the program, we explain there are, people say markets move up, down, and sideways, but that's just one way. There's certainly one way of looking at it, and that's what markets do. But within those moves, they will move either in a volatile way or in a very, they creep along, as it were. Well, pound Aussie yesterday, because of the news, moved very much in a volatile way. The indicators will help. This is the trend monitor, really stayed solid blue. It will dip to the transitional color, and then it will pick up again. It sometimes goes, as you can see here, from bright to bright, but not very often. And then the trend dots, what they do is they pick up the, as I said, the trend. You have blue, you have grey, which is when it's in congestion, and you obviously have red. But what's important with the trend dot is where it appears on the candle. They're dynamic. They will move up and down as the candle is forming, as it were. So what you want to see in an uptrend, you want to see them at the bottom of the candle. So that is a trend with volatility. At the moment, this is the last of the volatility candles. Quite a widespread candle, reasonable amount of volume underneath it, not as much of the volume that was under here. So we know we're coming to a pause point. But what volatility candles also do is they display a set of support and resistance levels. And since this volatility candle that was triggered way back in, let's have a look at the time, well, 11 o'clock last night, because it's 2 hours, you have to take 2 hours off the time stamp that's up on the chart. What has the pair been actually doing? Well, it's been moving sideways. It still hasn't decided whether to move higher or, you know, actually reverse lower. And if we go to the hourly, that's the array. Here we are. We can see here the pound is kind of flattening off, and the Aussie is kind of flattening off as well. So, you know, if you were looking for an opportunity, looking at all these time frames, looking at what's happening in this pair, you would think, you know, you're going to have to be patient. That is really what these charts are telling you. Now, it may pick up the pace. We will simply have to wait. Now, I want to quickly go to the pound yen, because I've been talking about the pound yen actually on my Twitter feed, and there's a trader, I think he's in Australia, because he talks about the Australian cricket team quite a lot, so I think he's in Australia. But he is he bought one of my books on volume price analysis, and he uses it, trades everything. He trades Forex, he trades some of the commodities, and one of his let me take this line off. I put it there to remind me about something that I wanted to talk about. Let's see if I can click it off. Not very successfully. No, I'll have to leave it. No, I was not going to cooperate. Ah, here we are. Let's take that off for a second. Delete. Right. He uses volume price analysis, and he uses the 4-hour chart, and this is the pound yen. And if we look at the pound yen, if I really scrunch that up, the one thing that this chart tells you is the extent of the congestion phase there's been on this time frame for this chart. It's, you know, I'm sorry it's so scrunched up, but, you know, I needed to give you, you needed to see how tricky it has been, especially if you are on the kind of medium-term time frames. Possibly on the faster time frames, there would have been trading opportunities. Now compare to what you can see on this. This is a trend higher, but look at the volatility. That is a very nice move, but oh boy, look at the whipsaw within it. Then it has gone into this long phase of consolidation. This is since the 23rd, well, not long, it's 23rd of October. Look at the volatility candles within this consolidation phase. Look at the shape of this chart. There's been attempts to break away from the volume point of control, possibly offering some nice, you know, trades, but then come back to the VPOC. This is why breakaway trading gets a bad press, because they think, oh, they keep getting fake outs, getting chopped away. But there's an advantage to breakaway trading, and that is when you know there is a fulcrum to this chart, and in this case it is the around the 140 region. Placing your stop loss is so much easier, because you know instinctively where to place it, and you can be quite aggressive with your stop. Yes, you're going to be stopped out, but when it does break and breaks decisively, then you are going to be rewarded by a really nice move. Let's just bring that back up again. Now, the reason I want to talk about this one from a VPA perspective is, let's see if I can get some drawing tools up. Let's have a look. What do I want? The spotlight. Here we are. Let's try this one. Right. This is the set of candles that we have here. This is this volatility candle with a lot of volume underneath it. Then we have another down candle, some wick to the bottom, reasonable amount of volume. Then you have this candle, which is a reasonable widespread, not much of a wick to the bottom, and more volume underneath it. And you think, well, you know, why hasn't that continued lower? Then you have a little tiny candle. These three candles with the 4-hour chart, you have to also read this relative to the time frame that the I'm going to have to take this off because this is useless. No, there we are. You have to read it in conjunction with the sessions. And if we put that over there, this is 6 o'clock. That is 12 o'clock, 10 o'clock, and that. So that is Europe, London, and then going into New York. So this is nice deep liquidity under these candles. And looking at it from a VPA perspective, you look at the anomalies, you look at the candle formation, lots of volume underneath it, but it's not as big as that candle here. And then you have this little candle here, which, if you like, there's a stopping volume coming in under there, a very narrow spread in a time of the market that was full of liquidity, deep liquidity. Look at support and resistance. Look to the left of the chart. We can see from the consolidation phase the strength of that support region. So is it any wonder that the price stopped, based, and then started to move higher again? It did actually get beyond the volume point of control, but it then came back and retested. And he actually put a tweet out saying that he was looking at the pound yen, and having looked at the previous price action, looking at the volume that was going in from a buying perspective, looking at the strong support, because the VPA is also support and resistance. There are 5 elements to volume price analysis: price action, volume, candles and candle patterns, and support and resistance, and time. And time is not just time frames, but but multiple time frames, not just one time frame. And he said that's what he saw was a nice opportunity to go long. And my contribution to his conversation was, I don't think he uses the VPOC, is I said the 140 was a key level. If it was going to go higher, the 140 would provide any support. We did have it actually sold off. It came in here. 140 did do its job, not precisely levels. You have to be a little bit generous with, you know, a few pips either here and there. We had that was a down candle, same volume under the previous one, but a much narrower spread, which is telling you that the selling is being absorbed, because if that was going to go lower with that amount of volume, that candle has to be the same size as that one. It's not. It's anomalous. And VPA, we're looking for anomalies in all their various forms. And in fact, it did bounce off this region. We have to talk about regions. We can see here in the Asian session, volume does die down, but we have to read it as in context. And then we start the move higher, driven also by the news and the polling data. Now, what we're seeing at the moment is an opportunity to the short side. And what do we see here? Well, it's nice. We've seen a move on the trend dots and the trend monitor. Let me quickly see if I've got a CSI here. Yeah, I think I have. Here we are. Let me go down to, say, the 5-minute chart on the CSI. Let me just take out all the others. Where we are, what's happening here? Let's see. Yeah. And what we can see here, we see a nice sharp move lower for the pound, sharp move higher for the pound yen, and we see a nice setup on. In fact, I've got the 3-minute chart. We've had congestion up until the London Open. Then we've had the pull away. We had a volatility candle, but in fact, it is carried on through. Buying has obviously come in because, you know, the things, we have buyers and sellers, you have this battle going on all the time. The actual entry point is here when you have a match of the 3 or 4 trend dots and a change in the trend monitor. What the shape of this chart is telling you is where this price is likely to be heading. Well, it's going to find some support at 141.40 and then some stronger support at 141.26. So, you know, it will hold you in. The CSI will pick it out. Let's have a look at the 12-minute. We've got here, we had the congestion, then we've got the break lower, and on the hourly chart, let's move to the hour because the 4-hour is, so what we're doing is we're actually taking a trade counter, if you like, to the bullish sentiment that we can see on the 4-hour chart, which is fine. And at the moment, we've got the VPOT is way down here. Again, the 140 level, very strong support. So maybe this might be worth it if you're a scalping trader, but if you know, if you are sort of looking at the slower time frame charts, think, well, that's awfully interesting, but I still think this is bullish. This is not for me. Really depends on, you know, what time frames you like to trade. But the shape of the chart, what is happening in the broader markets, what the indicators are telling you, you put it all together, and then you can decide, is it going to be a risk worth taking? Is this trade for me? And you can only make that decision by taking the trade, seeing how it plays out. How do you feel about that trade? Do you like trading the seconds chart? Do you feel comfortable with the faster time frames? Or do you say, no, it's really not for me. I like to go on the 4-hour and maybe even the dailies. And then it's got issues with stop losses, how you manage you know, the capital that you have. But all time frames are possible if you stick to micro lots. And you know, you juggle. What you have is you have a lump of money that you want to take to the market, and you want to get a return on it.
Just going to switch screens back to Ninja. Just to pick up on what Anna was saying, just while we do that, just move that out of the way. There we are. Yeah, okay, there we go. This is back on the Aussie Swiss, but just to say with the pound yen for a moment, it really does exemplify what Anna was showing, the fact that you've got congestion. Many traders ignore congestion. They don't like it because it means they can't trade trends, etc., etc. Congestion, the markets stay congested far more than they do trend. 70%, 75% of the time is congestion, 25% is trending. So congestion, and again, it's another facet that we explain in huge detail in the program, why these areas are so important. But the key point with the pound yen is this. It brings in the concept of time. This move is developing nicely on Aussie Swiss, by the way, as you can see. It brings in the concept of time, because if you look at the pound yen on a daily time frame, that pair is building up into a massive breakaway. So if you're looking for a slower time frame, then you know it's certainly one chart to consider, and the reason for that is very simple. It's all to do with the election, and come the 12th of December and thereafter, the breakaway from that price region is likely to be very strong, purely because the aspect of time, it's like the spring, it's like a clockwork toy. You wind it up, the energy that's contained in the spring, the more you wind it until you're fully up to fully wound, and then you let it go, and it's going to go the furthest travel that it possibly can with all that stored energy. It's exactly the same principle in a chart where you've got stored energy and the concept is time. That market is going to break, and it's going to break very strongly. But the same principle applies to that 3-minute chart that you saw earlier on MT5 with Anna's pound yen there. Exactly the same principle, it just happens to be on a 3-minute chart. You've got congestion, it's a long time, it's there for maybe 10, 15, 20 candles, whatever it may be, and then the market breaks. It's all to do with this concept of congestion and time. Just staying with what's going on here, this is the Aussie Swiss we were looking at earlier on. You can see it's developed nicely. This is on 15-second, up onto 2-minute, very nice. We had a volatility trigger here. Because I'm actually buying some come in here, we're now into the London Open. This is the London Open here, so we can now compare volume across this particular slice. This is, where are we, 7 o'clock. This is European Open. So we can compare this through here, and now we're looking at comparing the volume in here. Not such heavy volume, purely because the US is shut, and therefore, you know, the markets are relatively muted, but nevertheless, there's opportunities here. As you can see, it's self-explanatory. We've got a little bit of buying coming in under this candle, because if this market were going to continue lower, then we've got rising volume, and this candle should have been wide in some respects, even wider than this, because the volume is higher, but it's not, it's compressed. Therefore, we've got some buying coming in, simple as that. So the market is likely to pause. It's all about volume price analysis, using indicators and everything else. If we go up onto the 5-minute, what have we got? We've got a volatility trigger. So we know the market moved rapidly. We're coming out into London Open. Markets move rapidly away from the volume point of control. Gone through this area here. We're into light volume. Excuse me for a moment. Sorry about that. Into light volume down here. Just click that off. Go away. Trend monitor is bright red, which is very nice, and keeping us in the trade. And the trend line here, which actually comes with the trend monitor, it's really two indicators in one. So it gives you a perspective on the strength of the trend with the trend line. You can either have it switched on or switched off. And also you've got the trend monitor itself here. And this is the fulcrum of the trend line at 0. So once we dive below that, it also gives a sense of how far we've moved away from the original fulcrum point. It gives a sense of the angular slope, if you will, the strength of the trend, in other words. And if we go up onto the 15-minute, that's just really confirming it. This is London again, so we can't compare too many volume bars back here, but we can start to compare light with light here. And again, you can start to see this transition. We're now starting to see that ripple through effect from the trend monitor. We've gone into darker blue here on the 15-minute. So, there's plenty of opportunity here. But now what we're expecting, purely because we've got volatility here and we've got volatility here, is as a scalping trader on the 15-second time frame, if we're using that, then we're expecting the market to retrace, which is exactly what we're seeing right now. And it's also confirmed, as I mentioned here, we're seeing buying coming in here. This is the power of volume price analysis. This is a very simple example, but it reveals what is going to happen next. And if you use it in conjunction with the indicators and you understand the methodology, then it is the most powerful way of trading any market, not just spot Forex, but futures. You can use it for investing. And once you've learned the methodology, and we teach it in great detail in the Forex program, once you understand and learn this methodology, it's there for life. You don't need anything else. You've got price and you've got volume. That is the base methodology. And then we have the other indicators overlaying on top, which help you to unpick this complex arrangement of one currency being traded against another, which is not straightforward. But the opportunity to make money there is straightforward if you understand, if you have a base methodology, and then you apply the indicators using that particular methodology. You can start to see here the trend monitor. We've gone through a transitional phase, and we're coming into a bullish phase. So it doesn't matter what time frame you're using, and you can see here we've got the volume point of control up here. We've got a very strong area of price resistance coming into play here, which is likely to come into effect in the next couple of pips or so. We've got light volume down here, but we've got higher volume up here. So we're retracing back up to the volume point of control. If we look at the volume profiles, it's not particularly strong. We've had a good strong move. We had rising volume here and rising price, which is what we always want to see. Then we see a diminishing of the volume profile. Now we're starting to see it pick up again, so the buyers are stepping back in again. Are we going to see this hit resistance at this level? Well, it'll certainly come into play. It's a pretty strong region. And then we're back up at the volume point of control. So in terms of advancement of this particular move, at the very least, we're expecting to see some congestion around this region, purely because we've got high volume, we've got the volume point of control, we've also got this level here, which is, as you can see, it's been tested. If it holds, then it becomes stronger. It's a bit like spinach and Popeye. The more he eats, the stronger he gets. And this is exactly the same with this indicator. It's accumulation distribution. If it's tested and held, then it gets stronger and it's very thick. Now it seems we're going to break through. We've gone through it. Now it's become support. So we've got a nice support platform in place. We've gone through there. Trend monitor's blue, keeping us in. Now we're trading around the volume point of control. And all of that was really, if we go up onto the 2-minute time frame here, what are we seeing here? And again, it's coming back to this whole business of using multiple time frames. What are we seeing? We've got a very strong region here. This has been tested 7 times. This has been tested 6 times. Very strong. We've got a cluster of 2. So it's doubly strong, this region. So to break through there, we need to see good volume. We've got good volume under these last 2 candles. Perhaps this one is not quite as strong as it should be, or maybe this one is a little bit weaker than it should be because the 2 volumes are identical, and therefore, all things being equal, if this is your benchmark, in other words, then this one should have been that much higher, and it isn't. So a little bit of weakness coming in here, and we've also got this coming into play here as well. As you can see, it's being tested literally as I'm talking. We'll see if that gets through there. But that is a very strong region because you've got a cluster of two. One on its own is strong. Two together is immensely strong. It also gives you ideas for where to place your stop losses. If you've got these regions, stop losses above or below, where you've got congestion regions, where you've got volume point of control, it all comes into play as to how to set up your trading opportunity, where to place your stop loss, etc., etc. Down onto the 15-second, there we go. Got up to the VPOT, come off there. It's what we expect. What's interesting here is we've got falling volume under falling price, which is not a strong sign that that is going to continue. So if you're trading this long, that's a positive sign because the selling pressure, certainly on those three candles, is falling away. And therefore, we expect to see the market certainly weaken to the downside, possibly congest further. And then if you want to see further upside momentum, you've got to see a pickup in volume. Just going to head on to the indices just to get a view of sentiment on Globex. There we go. That's what's happening at the moment. That's why we're seeing a degree of selling of the Aussie, purely because sentiment is pretty weak. This is 5 minute on the top line. These are for the futures contracts, the E-mini futures for the YM, the NQ, and the ES. Down at the bottom, we've got the daily chart. So these are running despite the fact it's a public holiday in the US. Globex is still running. You can still trade these index futures, the E-mini futures, despite the fact, as I say, it's Thanksgiving. But that's partly the reason we're seeing weakness in the market, not hugely. The overall sentiment in equities is very strong, very bullish, has been for some time, but we're certainly seeing some selling off in the market at the moment. And that's the reason we're also seeing buying in the yen. Go back onto the currency strength indicator here. That was the buying in the yen. This is on 5. This is the magenta line. That's been pretty strong. This is the selling of the Aussie we've been seeing. This is the Swiss franc, the green line, which is now getting up to the top of the indicator. And the Aussie is now moving heavily down into oversold. So we've got overbought, oversold. We tick up onto the 10-minute. Okay, we've still got strong buying. This is the strong buying in the Japanese yen. So in terms of pound yen move, good solid move there. We've got selling of the pound, buying of the yen, very nice. That'll be a nice trend developing there as we saw. And there's still some way to go in terms of the Aussie Swiss. The Aussie is selling off here nicely. We've had a cross. The Swiss is rising. The question really you've got to ask yourself, certainly in terms of the Aussie Swiss at any rate, the cross here is quite low on the indicator. Ideally what you want to see, and I guess probably the pound Swiss is a good example. We've got the pound here selling off quite nicely, and we've got the Swiss here rising nicely. So there's a nice trend on pound Swiss. Where they are likely to cross is in the middle, which means that from a purely common sense perspective, an intuitive perspective, if you will, you've still got half of that move potentially to develop. Where a cross develops much lower down on the indicator here, for example, then yes, the Swiss franc has got a long way to travel, but the Aussie has got less far to travel before it gets down into oversold. So again, it's a question of looking at the opportunities. If you're jumping on an existing trend, then consider where the crossing point is. If you're looking at it as a cross, maybe getting in on a cross, you think, okay, well, I'm going to wait till the two currency pairs cross. That's my tactical approach, if you will. Then always be aware of where that cross is occurring. Is it occurring low down, which it often does? Here, for example, you've got the Swiss, you've got the Canadian here, the Canadian dollar. It's crossed very low on the Swiss franc. So the potential is that the run-on of that trend is likely to be relatively truncated, because what may well happen is the Canadian will then start to turn up, and what you will then see is congestion, because when you've got the two currencies traveling together, as they may well do in this case, then clearly the trend has no strength because both currencies are trading in the same direction, and therefore they're not going to go, there's no divergence. It's the analogy I've used many times before is the two trains running on the same track coming out of a station, for example. One is maybe traveling a little bit quicker than the other, but the actual differential speed between them is not great, and therefore it's exactly the same on a chart. If the two currencies are traveling in roughly the same direction, there's no great differential speed, differential momentum. If two trains are traveling towards one another, then the closing speed is huge. it's very quick. And it's exactly the same here, where you've got a currency that's falling quickly and one that's rising quickly. Then that is what is going to develop the momentum. Just go back onto the charts again, just see where we are with that one. Where are we? There we go. And it really just does describe it quite neatly there. We came, as I said, we've got this cluster, we've hit the cluster, we're just trading around this region. You know, it's that particular move that came in, and you can also see down here on 15, what have we got? We've got a volatility trigger come in now. So what are we expecting? Are we expecting this move to develop strongly? No. We're expecting this market to congest now because we've got volatility on trigger on 15, got a deep wick to the lower candle, decent volume under there. So it's certainly got some buying coming in there. But more importantly, we've moved outside the average true range. This triggers in real time. In other words, you don't have to wait for the candle to close. As soon as this is triggered, volatility is in the market makers are there, you're expecting at the very least congestion and the possibility of a reversal. And if that lines up with what the CSI is telling you and the currency array and the currency matrix, which we haven't looked at in great detail today, but if that lines up, then it's an opportunity for yet another reversal. And you're constantly looking at these signals all the time. And speaking of time, we've actually gone over time a little bit, so apologies for that. Just see if there are any questions. Sorry, I always have my chat box closed.
I've done existing. I've asked him to contact Jonathan at Help Desk.
Okay, fine.
Just going back to Michael.
Okay, no problem at all. Let's just go back onto the CSI. We'll have a quick look at the array as well. There we go. So that's on the CSI on 15. That's on 5. So what we're seeing now is classical. You know, it's the reversals. It's where we started. The Swiss franc here is starting to come off. It's had a nice run, and we're now starting to see that selling coming in. So we've got selling of the Swiss franc. We've got selling of the euro coming in. The yen here, we've had strong buying. We're now starting to see some selling of the yen. The pound selling is now reversing into pound buying. And the Aussie down here in oversold is now looking to perhaps a rally off there. So from a reversal perspective, you know, my eye, I'm looking up here at these guys. I'm looking down here at the Aussie, possibly taking reversal to the other side. Are we seeing that reflected on 10? It's starting to be. It's what you expect. It's not fully developed. Certainly the euro up here is nice. That's nicely, very strongly overbought and coming off. I think we've got some European data. I think the German data throughout the day. So again, you know, maybe one to consider, but certainly very strongly overbought there. Coming off nicely. These are starting to flatten off a little bit. The yen is starting to curl over. The Swiss franc is looking as potentially coming to a bit of a pause point. The Aussie down here coming to a bit of a pause point as well, up onto the 15-minute. And similar sort of picture, it's just starting to lose maybe a little bit of strength. The yen is losing a little bit of strength. The euro is starting to come off. The pound is selling off quite strongly already. Just head on to the currency matrix, just get a sense of what is going on. Just have a quick look at the euro, just isolate that out there. Sorry, not the euro, let's have a look at the Swiss franc, because that was coming off. And these were the this was the buying we saw in the Swiss franc, and that is now in terms of the complex. These are now starting to lift off the bottom, which is what you expect to see, because if you're starting to see selling coming in, then it's starting to change. And the matrix is there to give you this is on 5-minute again, it's to try and give you a view on not only the extremes, in other words, when a currency pair is at an extreme, which is also true on the currency array, but it also gives you a sense of whether sentiment for a particular currency is universal. In other words, are we seeing universal buying of the Swiss franc or universal selling of the Swiss franc? Because that's the river that you want to be trading. You want to be trading with everyone else. You don't want to be trading in isolation. If you're short a currency pair and everyone else is long, it's a much higher risk proposition. You want to be trading with the universal flow, and that's what the currency matrix does. It gives you all that information automatically. It tells you which are the weakest, which are the strongest, which ones are at extremes, and whether that sentiment towards a particular currency you're trading is actually now universal and indeed, is it actually starting to rotate and change and move the currency in the opposite direction? And the same is true on the currency array. I've got these isolated out on the pound just to get a sense of where the pound is in terms of the matrix itself. What this delivers, what the currency array delivers, is trend momentum strength. It gives you the angle of inclination. It tells you about the strength of the trend. Where is the strongest trend? Which pair is trending most strongly? And in addition to that, it also tells you about the universal nature of sentiment for that particular pair. You can isolate it out exactly the same way on the matrix. And finally, up on the ladder here, it also gives you a sense of when a currency pair is moving into an overbought or oversold state. When they're in a darker color like this with the brackets, it's potentially overbought. When they're in, when they come into a brighter color without the brackets on, they are moving to that condition of being overbought or potentially oversold. And finally, down onto the currency heat map, which gives you a view on perspective across the time horizons from the 1 minute right the way throughout to the month in terms of what each currency pair, the 28 currency pairs down here, are doing in terms of the sales. And it's just a great way to get a perspective on the bullish and bearish sentiment as it ripples through the time frames. The green are obviously bullish, the red are bearish. And when you have this up constantly, what you'll see is this ripple through effect. You'll see bullish phase here, maybe ripples out to 5, maybe ripples out to 10, goes out to 15, and it's all displayed here. These guys down here are weighted according to the sentiment, the bearish sentiment of time frame, because your common sense would tell you that if there's a bearish phase in a 1 minute time frame, then a bearish phase in a 30-minute or an hour is going to carry more weight. And that's basically the principle of how the weighting, the ranking ladder here is arrived at. So these are weighted according to the bearish or bullish sentiment by time. And so these will move up and down intraday. They maybe may move 1, 2, 3, 4 slots, something like that. But it will also give you a sense of, again, from a currency pair perspective, overbought and oversold state in terms of currency pairs as opposed to currencies. That's it. I'm going to wrap up. I think we've done all the questions. Are we okay with the questions, darling? Sorry. Yep. So all I will say is thank you very much for coming along today. If you have any questions, please just drop us an email, anna@annacooling.com or david@quantumtrading.com. Happy to answer them there. If you have questions about the indicators, just drop the guys on help desk. That's helpdesk@quantumtrading.com. They will be more than happy to assist you there. You can find all the indicators. I think I've got them here. Where are we? That is this is Quantum Trading. As you can see, we've got TradeStation coming soon. That is actually two platforms. We've got TradeStation Global, which is a partnering of TradeStation with Interactive Brokers. So if you have an Interactive Brokers account, it's a terrific way to trade Forex using Interactive Brokers, which also drives the indicators on the platform. But we're also working on TradeStation Securities, which is the US version of TradeStation also, and they will be available on both platforms. So you can find all the details here for MT4, MT5, NinjaTrader, and TradingView. You can buy one, you can buy a bundle of indicators. It includes all support. You don't pay for support. It's 24/7, 365 days of the year, and it truly is 365 days of the year. You'll always get an answer, even at the weekends. The guys are always there to help. You don't pay for anything else. You just pay once. It's a lifetime license. That's it. Nothing else to pay. You get all upgrades and free support for life. It's as simple as that. If you do buy the full package, then you get all indicators we develop in the future. It's just our way of saying thank you to you for taking that particular approach. And for those customers who've been with us early doors, several years now, they've benefited for all the indicators we develop. They just simply get them for free in the future. We will not be back later on. That's Anna's site there, so you can follow all Anna's posts there on the various markets and also find details on all the books as well. That's the education site, quantumtradingeducation.com. Yeah, I've got it there. That's the indicator site. That's quantumtrading.com. That's Quantum Trading Education. If you have some of the indicators and you want to upgrade to the education program, absolutely no problem at all. We're always happy to credit you with whatever you spent. That also applies to whether you've got one indicator and you want to maybe upgrade to the bundle or whatever it is. We will always be happy to credit you with whatever you spent with us. It's absolutely no problem at all. So that's it. We will not be back later today purely because it's Thanksgiving. So we will see you next week, same time. Hope you've enjoyed today. And thanks for coming along. We do appreciate it. So enjoy the rest of the trading day. Not sure how lively it's going to be, but there's always money to be made somewhere or the other. So enjoy the rest of the day and have a good weekend. And we will see you next week. Bye for now.